Today is Wednesday, March 12th. Welcome to my daily review. You're looking at a daily chart of the Nasdaq, which was up 212 points or 1.22% on average. 50-day volume here on the index. We could take a look at the particulars here that it made a low yesterday of 17,238, and that would be a 15% correction from the peak to trough. Made a higher low today. Yay. For once. And then it's still 8.6% below this 50 and 4.1% below this black line, the 200. But you can see the short-term moving averages are definitely turning lower. This feels like, to me, it feels like the start of a bear market. I don't get too negative, want to always stay positive, but I just have to call them like I see them. You could count with me here. 1, 2, 3, 4, 5, 6. Wait a minute here. 1, 2, 3, 4, 5, 6, 7, 8 days now where it's traded below its 200 and it's getting comfortable trading below this moving average. And even if it does trade up here to either the 10 or the 200, it's likely to be rejected. So, the correction, you talked about a 15% correction. That's just a euphemism for losing a lot of money in a short period of time. And if you're in this market trying to be cute and try to trade, there's a lot of trap doors out there for you and a lot of rug pulls and air pockets where you're going to lose a lot of money in a real short period of time. If you're trying to play with this market, you're playing with fire. I always want to have the market, lure me in or prove worthy of my money, and this is not doing it. It's guilty until proven innocent. And so, what drives the Nasdaq? We talk about this all the time. I get sick of talking about it. We know it's Nvidia, which was up 6.5% today, or Tesla, which was look at how far off the highs these are. This is what 488, and it made a low of what 220 yesterday, 217. So it pops a little bit to 248, and people are supposed to get excited with a 7.5% move. No, it's very likely that it will get rejected at one of these moving averages here. I would say maybe 280, yeah, 281 today. If it is able to trade up to there, it's likely to get rejected and trade lower. It's definitely in a downtrend. But one day people get excited and and want to own Tesla or Nvidia. But to me, no, this is not a playground that I want to play in. I've been sour on the Mag 7 for a long time. One is that they're overowned, they're overloved, they're overvalued, and there's nobody left to buy them. And two, I mean, you're not going to hit a grand slam with the one of these stocks. They have too large a market caps here. It's a 1.5 trillion market cap. To be a two bagger, it's got to go to 3 trillion. That's a stretch for meta platforms. Anyway, just showing you this is the strength. This is why the Nasdaq was up. But if we look at an equal weight or the breadth of the market, which is the S&P 500, the equal weight, remember that the Dow Jones Industrial Average is a price weighted index. So the stocks with the higher prices carry a greater weight. And the S&P is a market cap weighted index. So those large market cap stocks like Apple, Microsoft, Nvidia, those stocks, they're the ones that carry the weight in the S&P. So you take the equal weight, which takes all 500 stocks and weights them equally. This thing was down. I noted it like a half an hour into the session today. Like, wow, we had a nice bump in the Nasdaq, and this one started off okay, but look, immediately sold off. Went from what 173, and it took about an hour and a half, and it's down at 170, and just kind of faltered all day. This tells you that the large cap stocks are driving the S&P and equal weight. Most of the other 493 stocks are not doing well. So there's nothing that compels me to get into this market. Like I said, this really looks to me like the start of a bear market. I hate to be negative, but it's you got to be intellectually honest with yourself and just the market is telling me, I mean, as a market veteran, is telling me to stay away. And I think I'm safer that way. And yeah, you're going to miss out on days like today where the Nasdaq pops. But like I said, it's just, a few stocks that are trading higher. a lot of them did not do well. You can see the retail names popping, right out of the gate. There's retail folks chasing them. There's an arm here. 10 minutes in, it's at on 118, and not too much later, it's 114, So whoever chased this at the beginning of the open, they sold right into it and it closed at 112, So it's what, $6, $7 off its highs here. I mean, it's just not a market to be messing with. Apple, kind of the same thing. It started higher, it looked okay, and then sold off all day. App 11, this one's been you know, beaten with a stick. Was it at 292 this morning? And then, retail folks chasing it, they're just getting sold to, it didn't take long and it's down to 261. If we look at it on the daily, this thing's just been beaten. Waterfall chart right here. Looks like it's got a date with the 200, but what can you say? I mean, I'm just pointing this out. I don't own any of these. I'm just observing the market. This is Broadcom. Started off, retail folks chasing it the first 10 minutes. Yippee skippy. It's up near 200 and it didn't take very long and it's at 193. And that's the kind of market you're going to lose a lot of money in a short period of time if you hang around in these in this market and if you try to chase these any type of trade higher, any type of profits or anything that goes up, they're selling them immediately to you. This is Deckers from 223 down to what? Oh my God, this makes me sick. 119. Long-term winner now 45, 46% off of its high. And you get this, I talk about a correction is that's a euphemism for losing a lot of money in a short period of time, and that's what's happened with Decker. Look at all that selling there. There's like a stage four decline in Deckers. I just, wanted to show the 5 minute chart. Same pattern. Oh, it's going to pop. It's finally going to move. In the first, what, 5 minutes, it's at 126. Not too much later. Yeah, but now we're into the session. It's at 121. So. It's the same pattern over and over with these stocks. I'm not going to beat a dead horse here because I like horses. I like animals. But anyway, MicroStrategy right out of the gate, 269. All the suckers are chasing it. And then not too much longer, it's 248. I mean, come on, man. Don't be doing this. That's a hell of a drop, isn't it? 269 to 248. It's like a 20 bucks. Anyway, yeah, but the stock was up today. Yippee. Most people got hammered in that name. And I'm not saying that all of them are that way. I mean, AMD had a nice day today, but look at how beaten down this thing is. I got to be fair here and show the 5 minute chart. So if you chased at the open, yeah, there was some profit taking, but it did close higher. So there's that. Netflix, probably one of the stocks that's, I don't know, decoupled from tariffs, maybe. Somehow, the tariffs aren't going to get to Netflix, but yeah, opened up higher, sold off, but closed up, $24 or 2.75%. CrowdStrike also, this one's been beaten down. If I got to be fair here and show the yeah, look at this, 455 down to what, 303. Yeah, had a great day today, 346 up 5%. And this one actually closed higher as well. Still had that round of profit taking, as they open up, profit taking come in, but buying into the close and a good day for crowd. But just look at how far off the highs, it did rally through the 200 here, but bound to get rejected at one of these moving averages. I'd say that 10 is right. About 355, about $10 tomorrow, and then you get pushed down. Anyway, just pointing it out, there is nothing compelling about this market at all. Very few stocks making new highs, very few stocks showing, relative strength. Even the China stocks, Futu, this one's off its high. They report tomorrow. Just wanted to point that out. We'll have more in the morning on that earnings report. KWeb, this is an exchange traded fund. The Internet Index of China, pulled back to its 10. 10 cent. This is one that's kind of down today again, even though it's been pretty strong. VIPS. VIPs pull back to its 10. So even the China names now are that have been strong are starting to, pull back a little bit. This is Xpeng, has been up quite a bit, pull back a little bit today. Billy, I think got hammered today. This thing turned around, yeah, 6.5% down to the 21. BZ is one that I liked. I had BZ and Z Lab ready for my ready list this week, and I think I put Z Lab and left this one out, and that's a mistake because this one's had a good week. Yeah, this one's up 4.5%. And Z Lab, I think that's the one that I did pick, and it's down 2.5%. So my bad. But still, it looks like a good, pattern here. It's a nice symmetrical cup-shaped pattern. Probably needs a little more of a handle here, but it's handling out this week. You can see an inside week, so I still like Z Lab. There's very few stocks that I like in this market at all. Some of the European names, the DAX has been up a couple days in a row, but these are, taking a rest this week after big moves. Yeah, it was up 1.5% today, but just kind of taken a rest after these big moves that they've had recently. This is Barclays, and a bank, British financial bank, yeah, down to its 50, pulled back to its 50 for the first time since the breakout, and now had a nice move of 3% today. Sanofi, I do like some of the European drug makers. It seems like the tariffs are going to hit some of these companies. The NVO, Novo Nordisk CEO talked about that, but people are going to need their drugs regardless, and I think the CEO just said they're just going to charge more for them. RAHBY, this is Roche. They bought a company today, a weight loss company. It just, was had this buy point there, 43, 42, 43. It bounced off to 21 sharply. There's a weight loss drug. And I mentioned Novo. So they're in the weight loss category. Novo has been hammered, absolutely hammered this week. Yeah, they had a trial that didn't go as expected, and now this Roach in competition with them down 14% this week. When it rains, it pours. In a stage 4 decline is Novo, and it needs to find a bottom. And oh, the other one I like is Novo Nordisk, European drug maker. I don't know why I like it. Yeah, it was up 1% today, but you could see it looked like it was going to break out, then pull back to the 10, pull back to the 21. It needs to bounce here. Um, Says it was up to 108 something. So I don't know. This market surge is not, it's been a little wonky lately. All right, I'm going to move on. The insurance companies, Root made a new high today, closed 57% of its daily range. Okay. I'm just having a hard time finding anything that I really like. I mean, that I really, are compelled to buy. And Allstate, another insurance company, just still forming a base here. Hard for me to get behind these. They're inflationary as well. This is Brown and Brown pulling back to its 21. It's got that 114.15 buy point. Still, I'm not interested in that. The gold miners, yes. The commodities I like. Yes, I like AEM above 100 there. You can see that 101.45 area, but just above 100, this is a nice little shelf pattern, if you will, a Darvas box, if you will. If it can break above that, I'm interested. Yeah, 101.05 is fine. I would like to see it, 102 with some volume here. It looks like it's getting some volume this week, up 2.2%. It's only been 3 days, but yeah, give it 2 more days. I kind of like this. You can see on the weekly here, that's 3 weeks tight pattern here. So yeah, that one looks pretty good. Other mining stocks, GFI looks pretty decent. A South African one, AGI, a Canadian company, Alamos Gold, just surfing its moving averages here, up 2.3% today. Nice move there. So, and then I did mention some of the drug names. AbbVie, I like. Not not compelled to buy, just kind of, I like any stock that's above its 10 EMA, and that one certainly is. TGTX is another one. Now it pulled back today to that 36.84 buy point, and if it wants to do that, I'm going to put this one back on our ready list here. You could see that the low is 36.82, which is right at that buy point. So it had this break above the downtrend line. It rallied up. Now it's pulling back the last couple of sessions in light volume, which is what you want to see, allowing that 10 EMA to catch up there, which today was 35.67, going up what about 40 cents a day. So tomorrow, I don't know. It'll be 36, probably a little bit above 36 tomorrow. So maybe in a couple days or next week when the 10 EMA catches up with that buy point there and it pulls back. And maybe it'll bounce off here, and give us an opportunity, if you didn't buy it, an opportunity to get into it. But like I say, there's really nothing compelling me to really dive into this market. I was looking at Amgen today, and oh my gosh, this one fell out. I guess because of the Roche drug. Yeah, because they have a weight loss component as well, Amgen. Anyway, Jazz Pharmaceuticals, our president, Donny Tariff, talking about Ireland tariffs. This is not an Ireland company. This is a company from Palo Alto. It's a medical drug stock, but they have the Ireland headquarters. And this is what Trump's talking about. These companies that have these overseas addresses, they get away from paying taxes. So he's putting a tariff on them. So that's knocked this thing down today. And he specifically mentioned Ireland pharmaceuticals, and he's right. They are going overseas to avoid taxes. So if they want to pay taxes, they're just going to charge more, and that's all inflationary. And that's part of, the problem here. I mean, if you're intellectually honest, you have to be open-minded that some of these policies that we're starting to employ could be hitting our economy and causing, a bear market. So I'm a real positive guy. I know that longer term the market goes higher, but I'm also got to be honest in that, maybe some of these policies are going to hurt us, and I don't want to get hurt in the market. I don't want to see anybody get hurt in the market. And if you're on the outside looking in, you're okay with it coming down. It's better than being on the inside trying to get out when stuff is crashing like this. I've showed you a ton of stocks already that have been really hammered, and I don't, I just don't think it's a healthy market to be getting involved with. I showed you Apple 11 earlier, how fast these things come down. I mean, if you 525 to I should just go here out of the weekly. I mean, 48% off of its 52-week high, and you could see it just happened so quickly. Just a couple of weeks here, and you're toast. You lose a lot of money in your portfolio, so there's no reason to get into this market. It's trying to reprice this uncertainty of these tariffs, and it's really throwing it a curveball, and it could be longer term detrimental to our economy. So you just got to be open-minded. You got to be flexible. And right now, you got to say to yourself, is this market compelling enough to lure me in? And the answer is no, 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 no. This is guilty until proven innocent. I can't say it often enough. Another stock that I like, this is Dutch Bros. Nothing has changed with Dutch Bros. The story, in fact, has gotten better. They're opening more stores, they're taking market share, they're increasing their sales and earnings growth, but the stock price is going down because, multiples are contracting in this type of environment. So, not very long ago, it was what, 86, 88, what day was this? February 18th, and here you come to March 10th, and it's $57, $30. What the heck's going on here? It's like I said, correction's a euphemism for losing a lot of money in a short period of time, and I don't want people to get hurt. If you just sidestep this stuff, we can get back in when the market cooperates, decides, deciphers what's going on with these new policies, because it's really, I'm having a hard time. And like I say, I don't want to get hurt. I don't want anybody to get hurt in this market. If you just go to cash, it doesn't hurt. You're not missing anything when there's no follow through day. There's no rally that's happening in the market. And if there is a rally that's going to last, I got to go to the Nasdaq. When we have these rallies, folks, these rallies last, for weeks and weeks and weeks, 12, 14, 16, 18 weeks, and then we get a correction. 12, 14, 16, 18 weeks, and you get a correction. 16, 18, 20 weeks, and then you get a correction. This could be a top. You have to be flexible enough and have an open mind enough to say, maybe, the Bulls had their run and now the Bears are going to have their turn. So, yeah, just got to be open-minded and flexible enough. And don't be dogmatic and try to fight the market. Don't argue with Mr. Market. This is telling you something right here. And it doesn't like what it sees. So I'm not going to argue with it. That's it for me. Thank you for watching. At mcstockcharts.com, we never give up except for in honor of the great Steve Jobs. I have one more thing. Adobe, ah, spit the bit once again. These AI companies, they're saying all the right things. Their earnings was okay, their revenues were okay, but their guidance is, you know, they're playing that game where they're lowering guidance or giving tepid guidance so they can, beat these expectations. So that's not really, you're supposed to beat and raise, and then beat those expectations. That's what happens in a real strong uptrending market. Adobe's been hammered at the last three or four earnings calls, and this doesn't look good. It's only down 2.5% after hours, but yeah, I wasn't really impressed with that earnings report. AEO, I have more in the morning on them as well. Yeah, they're down 6% there. Their earnings were okay, and they met revenue. It's just their forward guidance. They're yeah, being conservative, and I don't think they're. I think they're being honest. They're lowering the bar because the consumer's slowing, and they know it. Yeah, they increased their share buyback program, but it's not going to be enough. It's only like 50 million, and yeah, that's too bad. It's just if you're in retail, you have to get out. I showed you Deckers earlier. This is one of the big leaders. This thing's been slaughtered. Cava, which is one of the restaurant leaders, slaughtered. I showed you Bros earlier. Sweet Greens, which was a darling, just slaughtered. These things have been murdered. I mean, it's really it's just the market seeing that the economy is going to slow, the consumer is going to slow, people are going to be eating out less, spending less money on food, and the discretionary items like this, people are going to spend on essentials, not on those discretionary items. All right, Path reported tonight. I did not see the report. Ooh, a 16% haircut after hours. Yikes. Sentinel One, this is one of those cybersecurity names down, yeah, 16% after hours. This is what I'm talking about. Man, people, you're just going to get hurt in this market. Oof. This is Crown Castle, REIT. These things don't move a whole lot. It's up 1%. I'll have more in the morning on the earnings report. We have some other reports coming in tomorrow morning, but I can't stress this enough. Be careful out there. Do not get out over your skis. Do not chase. Do not have big positions in this market. And if you have profits, you got to take them quickly because if you don't, the market will take them for you. If you don't practice risk management, you won't have any capital to manage. So just be careful out there. Wait for a better time. Thank you for watching at mcstockcharts.com. We never give up.